Friends, in today's video, we will discuss Motilal Oswal Small Cap Fund. As you know, all the funds from the Motilal Oswal Fund House deliver decent returns. Last year, there was a slight exception in this case as some controversies got associated with this fund house. And due to that, its performance was affected negatively. Despite that, Motilal Oswal Small Cap Fund has continued to maintain its number one position in its category by generating very good returns. As you might be aware, it has only been a year and a few months since this fund came into existence, and in that short period, the fund has performed exceptionally well, surpassing all the established funds and achieving the number one position in its category. This has been made possible due to the investment strategy of Motilal Oswal Mutual Fund, which is quite an aggressive investment strategy, a growth investment strategy, because of which the fund is performing so well. All the funds of the Motilal Oswal Fund House perform well due to this very strategy. We will also discuss what this strategy is in this video, but before that, let us discuss how the fund has performed during the short time period of 1 year and a few months. If we talk about the past 6 months, while there has been a decline of around minus 12% in the small cap fund category, this fund has seen only a decline of 9%, which means it has outperformed the category by 3%. Last time, about a month ago, when a video was made on this fund, at that time, this fund was underperforming its category in terms of 6-month performance. But now, recovering from that underperformance, it has started to outperform its small cap fund category in this time frame as well. The reason behind this is that the fund which follow aggressive investment strategies tend to be slightly more volatile. When the market declines, they fall a bit more, but when the market recovers, they also recover very quickly. That is why when a slightly bullish sentiment emerged in the market in the past 2 months, the fund has recovered rapidly and outperformed the category in the 6-month time frame. If we talk about 1 year performance, while the category has given only 5% returns, this fund has provided 16% returns. So you can see the huge margin by which it has outperformed its category in the 1 year time frame. And since the fund has been in existence for only about 1 year, and therefore data for longer comparisons is not available. Currently, this fund's AUM is at a very reasonable level, which is quite suitable for a small cap fund, which is only at around 4,300 crores. On the other hand, there are funds like the Nippon India Small Cap Fund, whose AUM exceeds rupees 58,000 crores. For such a large fund, it becomes a compulsion that they cannot invest too aggressively, and gradually their performance becomes quite mediocre. If the AUM size of a small cap fund becomes too large, it creates this problem. But this fund doesn't have that issue. It has an AUM of just rupees 4,300 crores, due to which it can invest in the kind of small cap shares it deems fit without any liquidity issues. This is also evident from the fact that this fund invests in even smaller cap shares within the small cap category. There are 250 stocks in the small cap fund category. Now understand this, not all of them can have equal market capitalization. Among these 250 companies, the first and last companies would have a significant difference in market cap. So this fund invests in such stocks within the small cap category whose market cap is lower, and this benefits the fund because the lower the market cap of a company fund invests in, the greater the potential of higher returns, as smaller companies grow faster in comparison to companies with large market caps. In this context, while other small cap category funds have invested in stocks with an average market cap of rupees 11,300 crores, this fund has invested in stocks with an average market cap of rupees 3,700 crores. So here you can see a nearly 4 times difference. This means the fund is very aggressive, and due to this, you will see a lot of fluctuations in its NAV. But such funds, in the long term, if you remain invested, tend to generate very good returns for their investors, particularly in bullish phases. The fund's expense ratio is also quite competitive. This fund's expense ratio is only 0.41%, whereas the category's expense ratio is 0.68%. So even here, you are getting a significant advantage of 0.27 basis points in your NAV. Now let us discuss the fund's investment strategy. As mentioned, it follows a high growth investment strategy. It is an aggressive investment strategy, and funds that follow aggressive investment strategies tend to have a concentrated portfolio. They don't invest in too many stocks. Their portfolio remains quite concentrated, as this fund has invested in only 51 stocks, whereas the category average is 85 stocks. So compared to that, it has invested in fewer stocks, which makes portfolio management much easier. Apart from this, funds that follow high growth investment strategies invest in high P ratio stocks. Further, if you want to invest in high growth stocks, you should be ready to pay high P in the market, as market already discounts their growth potential and provides potential high growth companies a higher PE. So, investing in high PE stocks becomes a compulsion for such funds that seek high growth. Therefore, the fund has invested in high growth stocks, and due to this, the P ratio of this fund's portfolio is 33. Whereas, if we talk about the category, this average is hovering around 20 only. Now let us discuss how this fund is for long-term investment, whether you invest through lump sum or through SIP. In both the cases, this fund has the potential of providing you decent returns if you stay invested for long term. It is a fund from a highly reputed fund house and follows a very aggressive investment strategy. Along with that, its AUM is also low, so managing its portfolio becomes quite easy for this fund. The expense ratio is also low, which is beneficial to you. But while making a lump sum investment, do keep in mind that you should not invest the entire amount in one go. Whatsoever investable amounts you have, divide them into a few installments and keep investing one installment every month. How many installments should you divide it into? That depends on your risk tolerance. Normally, you should divide it into 6 installments, but based on your risk tolerance, you can also divide it into more or fewer installments and invest accordingly. In this way, you get an average price which reduces the chances of you investing all of your money around the market top when the market is about to peak. This video is only for educational purposes and is not an investment advice or recommendation. Always conduct your own research or consult a financial advisor before making any investment decisions.